So now we're going to look at the concept of failure. And this concept is paramount to the vast majority of stuff that we teach a little bit in depth in our mentorship, where pretty much all of my trades have some form of failure associated with it. And it obviously helps for us to initially define what we look at as failure, because it's a very broad term. And for our definition, failure is an attempt that the market makes to either continue or reverse a trend, but it cannot achieve it. And that's very important how we define it and how we use that wording, because it's not we're in a bearish trend and we have some bullish, sustained bullish price movement, right? For me to define failure, I need a significant attempt for the market to reverse the trend and actually achieve that. And by that, I mean this candle sweeping underneath here, great. We've got ourselves a double bottom, really, which doesn't look like it obviously in terms of outcome. But in terms of process, we want to be able to put ourselves into the market on the close of this candle where we're failing underneath. The market then rallies and it can't close above this candle here, right? So it's not the bullish movement in a bearish trend or the bearish movement in a bullish trend. It's the market attempting to reverse or continue this trend, right? The market's continuing this bearish push. Had this bearish push failed and continued, I would look at this as failure and a new trend is now starting, right? And we got this, which we just went over in our intermediate time frame here, right? So it has to be a genuine attempt, and that genuine attempt has to be based off of the time frame associated with it. For example, if we look over here at this move that eventually ends up breaking this low, we find, let's actually speed this up a little bit, we find that it has to be based off of this time frame. If we get a 1 minute closure underneath here, right? And this example doesn't have one. However, if we have a 1 minute closure underneath, say our hourly candle opens here and we get a whole bunch of price action underneath here, but the higher time frame is just accumulating to reverse, and you see this quite often. We need to have that failure associated with the higher time frame because this is a higher time frame low. And that's very important, because otherwise we'd be looking at any 1 minute or second sweep and having that have failure. So when we're looking at this movement, for example, we now have to look and see the next obvious question, which is, how do we determine if something is failing? Right? When do we confirm that? And a huge part of that is context. So we've learned in the range module that there's major context when you have accumulation at the bottom of a trend. We then have a clean manipulation leg. And usually when that has a strong reversal, you have a high probability that the higher time frame has now finalized, at least in the short term, this move. And we see that here. So our high is here off of our manipulation leg that we saw in the 15-minute time frame. And this movement clearly breaks above this consolidation, sign of strength. But now we're looking for the market to attempt to continue this trend. Whereabouts is that going to come from? It's going to come from our prior zone, right? Narrative doesn't just omit market structure, it works with it. This movement is retracing back down here. We have a higher time frame movement that comes out of it, sustained strong pressure. We're not looking at points, we're looking at how price is delivering. This has many attempts to reverse this trend, right? But it continues lower. And then we break above order flow here, above this high. We trade back in, again, trying to continue this bearish trend. And what do we have? We have this low that then puts in another high in this order flow. So now the market has attempted to continue this bearish movement, and instead we continue with our higher time frame price action. So context is key when we're looking at accumulation, but when we're looking at confirmation of higher time frame movement, usually we refer to the 5-minute time frame. And what I mean by that is that for this reversal, yes, we have our trade up. We actually failed to put in a valid low here. And what this did was it mitigated this area of interest. You'll notice this is not a swing. But this trades down, fails to make a new low. You'll see that this major sweep happened. We now have failure to go lower here, defined by this candle now closing above here. So now we have the attempt to reverse. This area is now called balanced. We've now traded in. We've now mitigated this movement entirely, this leg. And we're going to continue higher. And you'll notice that failing to go higher here sends us lower. This movement in a bearish trend, we're expecting to put in a new high until it's done. Right? We're not creating swings in here. We finally create one here. Right? But this is not a swing. This is not a swing because this is currently not put in a valid low. Right? We trade higher. We go sideways. We attempt to reverse, again, failing. And we continue higher. We actually don't put in another 5-minute valid high all the way until here. And you'll notice as well, if we're going to trade back down to this swing, this area of interest, usually we get failure to go higher, which then signals the market to trade lower to our next objective and then trade away from it. This validating this low here, we then trade back in and go. You'll notice that sometimes we get these areas that are now mitigated. We don't get our 5-minute sweep, right? We get our failure higher. We don't get that sweep lower, right? Trading higher. And again, same sort of thing. We put in that valid high here, right? We validate this low here. And the market attempts to continue this bearish movement, right? It's always trying to break structure, but it's also always trying to continue it, which sounds a little paradoxical. However, this is how people get involved on both sides. Shorts get run out, and then the movement happens. Longs get run out, and then the movement happens. That's how the market moves. So this movement continues on until finally we have a change in order flow that occurs here with this higher time frame movement. We then trade back in, and now we start to look for failure on the short side. We don't look at it over here until order flow is broken, right? We need that predominant break of structure or change in order flow if you're being very aggressive. And now we're looking for signs of failure, which is now validated after we make a valid high. And then the market starts to unravel. We don't need to be early, right? We're not trying to catch this high in here or even in here, although there was an opportunity in this, right? We're not trying to do that. What we are trying to do is find high confirmation, high probability areas where we're expecting violent price movement away because price now tipped its hand, breaking this order flow that we saw earlier. We're now looking for failure inside. Price has tipped its hand and wants to go lower, validating this movement in here. Down it goes. So let's walk through from our 15-minute time frame and look at the 1 minute, which we use for entry. Now it's important as well that we look at the 15-minute as our bias time frame. We use the 5-minute for validations, but our 15-minute again is our immediate bias. And when we look at order flow, you'll find that the 1 minute will often give you that early trigger. But in terms of structure and order flow in the 15-minute, that's when some large moves can happen, okay? So the 1 minute will facilitate, and you guys will learn this in Module 3 again with the multi-time frame analysis and whatnot, but you will see failure happen on the 1 minute, But all that's doing is facilitating a movement back up. We're looking at failure off of the 15 to really generate significant movement. So for example, we have failure higher here, clearly, right? Sweeping and failing. We've now got a break. We trade back in. This was the attempt of the market to continue this bullish movement, and we've now failed and started a new trend, at least down for right now. So when we're looking at order flow, you're looking at this high put in this low here. That low then put in this high, so we mark it out, which then put in a new low. If we drew out using our path tool, we would see something similar to this, right? This would actually go down, we then trade back up to here and then lower. We're not concerned with anything that goes on in the order flow here. This is all internal. This low has to break this high, and obviously it can't, right? But you'll often find that it takes out the liquidity internally before the movement happens, okay? So zooming down, we're looking at our 1 minute time frame from this movement, and you see failure, right? And you see an attempt of the market to continue this bearish movement. So we're expecting, if this failure continues, right, this attempt to go down, if we start moving higher, we're going to mitigate the last structural zone, right? Now, this doesn't change the order flow, which is above this high. Now, I'll mark out the 930 high as well, because that's usually an area of liquidity, because there's so many orders that are placed in the first 5 minutes of the day. Now, again, we're expecting to trade higher, and we're looking, given that we're in a bearish movement, we're looking for failure to go higher, which then tells us we're going to continue this trend lower. So this movement continues up, okay? We get a bear bar, cool. Is that failure? No, right? We unload, sure, inside of our zone, and this is a very aggressive entry that you could look to take based off of the SNDR, okay. But we're looking just right now at how price is delivering, and we're looking at the changes in order flow that then tell us the market's going higher, right? We've now broken this low. Ideally, we would get a trade back in, right, here, and if this candle, say, ended up being weak or whatnot, then we could look for that second entry trade short. We don't get that here, right? So instead, we're spooling lower, and now we're expecting that this high is going to put in a new low. The only way we would look at that, not putting in a new low, is if we get failure, right? So we're trading up. We've now got this tap into this imbalance here. Market's attempting right now to continue this bearish trend, and we get failure, right? We're sweeping underneath here, and now our concern, should this candle close above here, it's a sign of strength, and we definitely don't want it trading above this high. Otherwise, we're looking at this low being at least in the interim strong, and we would expect to take this high, right? So we trade up. We've now traded above that. We trade back down. We're finding strength, and away we go. Okay, now we've got a lower time frame break in order flow. This high has now failed to deliver to this low, which is our expectation in a bearish trend. So we mark out this high, and this is our expectation of price. It should now run that high out. And sure enough, out it goes, right? Then putting in more bearish price action. So if we get a movement up, a bullish movement up that fails, our expectation is that this low has now failed to put in a new high. We're still in a bearish trend. Our 15-minute order flow is up here. However, we're looking at this lower time frame, which facilitates what the 15-minute wants to do, which is our bias time frame. If this continues, then this is telling us right now that lower prices are imminent. And we go lower, breaking this low, okay? Now, this is where things get interesting, because if we look at our 50-minute time frame, we need confirmation, right? We want this to close underneath here. And instead, we get this candle, right? So this 15-minute failed to close underneath here. We then attempt to continue this bearish trend, and we were found with failure, right? This ended up being a 15-minute sweep, and we're looking at this movement that broke order flow. So this was a very aggressive long based off of what the 15-minute is telling us, which is now trading higher. This is still our 15-minute predominant high. This is the one that needs to break if we're going to have a higher time frame change in order flow, as that's what the 15-minute facilitates. The 15-minute facilitates the higher time frame. The 1 minute is facilitating what the 15-minute is telling us. So they all tie in together. Again, you'll learn a lot about that in Module 3. Now, we can obviously speed ahead and see that that failure then took this high. Why? Because the 15-minute area was here, right? Yes, on the 1 minute time frame, this traded in, and this is technically a protected high, but in terms of our bias time frame, we use the 1 minute for order flow, and this now failed lower, which then sent us higher above here. So again, we're looking at 15-minute time frame order flow. Now, if you're aggressive, you're looking at 5 minute for your structure instead of 15-minute for bias, and that's fine. And if we use the 5 minute in this example, then it becomes actually a little bit clearer as well, where we have this high, okay? We've obviously put in a new low, we trade back up, we validate this high here, and it becomes protected on this movement down. This does not create a valid low. Despite all of this pullback, we actually could not close above this candle here. And then we sent ourselves lower. So this is all one current swing until we finally get a body closure above this candle. Now our expectation in bearish trend, just to reiterate, is that this movement, this high being this high in this diagram, is to put in a new low. So our first major thing, like hypothetically, say we shorted here at 36.75. Our first major consideration is if we fail to make a valid high here, which would signal that we're still going higher. If we cannot put in a valid high, it means we are still going higher, right? For the same reason that we couldn't put in a valid low here, well, guess what? We kept going lower. This is failure on this time frame, right? So we're looking at the same sort of thing. We've now traded into this imbalance. Bullish imbalances in a bearish trend. Nothing that you're really going to be concerning yourself with, right? There are areas of interest, yes, where we expect the lower time frame to trade back up. Why? Because we're looking for that attempt to rally that cannot, right? And then we can deem failure occurring here. And once we've occurred or deemed that to be occurring, we're now looking at this low. So let's zoom back down to the 1 minute. We'll take a look at what ends up happening here in the next 5 minute candle, right? So we're trading sideways, trading sideways. We then attempt to rally here, bear bar. Do we get follow through? Yes, right? And we continue on for a couple of candles. And now what does our 5 minute look like? Our 5 minute looks like it's put in that valid high. Here's your retracement on your 5 minute time frame. We're expecting failure now because we've put in a valid high on this move. And our expectation is now, unless we put in a valid low internally, which is unlikely, we're going underneath this, right? And we are only looking for shorts in this movement. We're looking for failure to go higher to get aligned with our 15-minute or 5-minute time frame. That keeps us on the right side of the trend, and we only use the 1 minute for these attempts to rally in a bearish trend or attempts to fail in a bullish trend, right? We tried failing here, we couldn't, so we kept going higher, right? This certainly tried putting in a bearish candle, and it succeeded at that, right? We tried rallying here, major failure, lower. We're now looking for all attempts in this movement, expecting this low to go. Any attempts to rally, immediate failure, right? Attempts to rally again, failing, okay. Our expectation is after we put in a valid high in this 1 minute move, our expectation is that low, which just got taken. And we'll look to follow this until we take the intermediate time frame bias or until we break order flow, which we talked about earlier, right? So we have this high, We now have this high. We now have this high, right? These highs are putting in new lows on our lower time frame, right? We've now put in this one, right? We didn't break order flow in here at all. And our expectation is to continue lower, which happens.